Actuarial department. Actuarial department calculates policy rates, reserves, and dividends. Alien insurer. An alien insurer in the U.S. is an insurer whose principal office and domiciled location is outside the country. Broker. Represents themselves and the insured, i.e. client, customer. Captive insurer. An insurer established and owned by a parent firm for the purpose of insuring the parent firm's loss exposure. Certificate of authority. A license issued to an insurer by Department of Insurance, which authorizes the company to conduct insurance business in that particular state. Claims department. Responsible for processing, investing, and paying claims. Divisible surplus. Amount of earnings paid to policyholders as dividends after the insurance company sets aside. Funds required to cover reserves, operating expenses, and general business purposes. Foreign insurer. An insurer with its principal office or domicile location in a state different from the state it is transacting insurance business in. Fraternal benefit society. Nonprofit benevolent organizations that provide insurance to its members. Industrial insurer. Make up a specialized branch of the industry, primarily providing policies with small face amounts with weekly premium, also known as home services and debt insurers. Insurance. Transfer of risk through pooling or cumulative funds. Insured. Customer receiving insurance protection under insurance policy. Lloyd's of London. Group of individuals / companies that underwrite unusual insurance. Multi-line insurer. An insurance company or independent agent that provides a one-stop shop for businesses or individuals seeking coverage for all of their insurance needs. For example, many large insurers offer individual policies for automobiles, homeowner, long-term care, life, and health insurance needs. Mutual insurance companies. Insurance companies that are characterized by having no capital stock, being owned by its policy owners, and unusually issue participating insurance. Non-admitted insurer. A non-admitted or unauthorized insurer is an insurer who has not received a certificate of authority from a state's Department of Insurance authorizing them to conduct business in that state. Non-participating policy. A policy typically issued by stock companies and do not allow policyholders to participate in dividends or electing the board of directors. Participating plan. Our participating plan is an insurance policy under which the policy owners share in the company's earnings through receipt of dividends and also elect the company's board of directors. Commercial private insurer. Companies owned by private citizens / groups that offer more than one insurance lines. Commercial insurers are not government owned. Reciprocal insurer. Unincorporated organization in which all members insure one another. Reinsurance acceptance by more than one insurer of a portion of the risk underwritten by another insurer who has contracted for the entire coverage. Reinsurer. A company that provides financial protection to insurance companies. They handle risks that are too large for insurance companies to handle on their own and make it possible for insurers to obtain more business than they would otherwise be able to. Risk retention group. A group-owned liability insurer which assumes and spreads product liability and other forms of commercial liability risk among its members. Self-insurers. A self-insurer establishes a self-funded plan to cover potential losses instead of transferring the risk to an insurance company. Stock insurance company. A company owned and controlled by a group of stockholders whose investment in the company provides the safety margin necessary in the insurance of guaranteed fixed premium non-participating policies. Surplus lines insurance. A non-traditional insurance only available from a surplus lines insurer. Underwriting department. Department in which an insurance company responsible for reviewing applications, approving or declining applications, and assigning risk classifications.